They lost everything. The business collapsed, the bank account hit zero, and the dream died. So why are they still paying hundreds of dollars every single year to keep that dead company's name on file? Why would someone who calls themselves financially intelligent burn money on something that produces absolutely nothing? This is not a mistake. This is one of the most deliberate, calculated moves that self-made millionaires make after their first major failure. And almost nobody talks about it. Here is what the financial gurus selling you morning routine courses will never tell you. The paperwork from your biggest failure might be worth more than the paperwork from your first success. Not emotionally, not philosophically, legally, financially, structurally. The ghost of that dead LLC is quietly doing work for its owner every single year. And if you dissolve it, that work stops forever. Let me walk you through exactly what is happening beneath the surface. When a business fails and the owner files for dissolution, the state closes the record. The name becomes available, the history becomes fragmented. The contracts, disputes, intellectual property registrations, and timeline of decisions all become harder to reference in a legally coherent way. But when a millionaire keeps that LLC active, even at the cost of a few $100s annually in state fees, something completely different happens. First, let us talk about the name protection angle. Successful people often build personal brands, consulting practices, or holding companies that reference their origin story. If you dissolved your first LLC and someone else registers that name in your state, you have lost a piece of your documented history. Keeping the LLC active locks the name permanently in your name. In a world where branding and documented credibility matter, that is not a trivial thing. Second, and this is where it gets genuinely powerful, there is the legal shield continuity argument. Many millionaires who experienced their first failure did so in industries where disputes, chargebacks, or liability claims can resurface years later. An active LLC with a clean status record looks fundamentally different in court or arbitration than a dissolved one. A dissolved entity suggests abandonment. An active entity, even a dormant one, signals deliberate stewardship. Some attorneys advise clients in industries like real estate, food service, and e-commerce to keep early LLCs active specifically because it demonstrates ongoing intention, which affects how judges interpret past decisions. Right here is where I want to pause and say this directly. If this kind of information is valuable to you, if you want to understand the hidden financial and legal structures that wealthy people use that never show up in mainstream money advice, hit that subscribe button right now and turn on the notification bell. This channel is built for people who want the real architecture of wealth, not the motivational surface. Subscribe before you forget, because the next few minutes are even more valuable than what you have already heard. Now let us talk about the third reason, which is perhaps the most counterintuitive of all: tax positioning and cost basis documentation. When entrepreneurs build their second, third, or fourth business, they frequently reference the operational history of their first LLC to establish context for depreciation schedules, intellectual property valuations, and business purpose documentation. The IRS and state tax authorities place significant weight on documented continuity of business intent. An active LLC, even one with zero revenue, is easier to reference in audits and tax filings than a dissolved one whose records may have become incomplete or inaccessible. Some wealthy business owners have successfully used their dormant original LLC as a subsidiary vehicle for holding specific assets, trademarks, or domain names, keeping overhead minimal while maintaining the legal infrastructure. Fourth, there is the mentorship and deal flow angle that nobody discusses. When a millionaire sits across from an investor, a bank, or a potential partner and says, "I have been in business continuously for 12 years, that statement carries weight. The fact that one of those entities is dormant and has generated no revenue for a decade is not always relevant in early conversations. The documented existence of an active registered business entity spanning over a decade of your professional life signals staying power. It signals that when things got hard, you did not just walk away. You maintained your obligations. You kept the lights on even when the lights led nowhere. Fifth, and finally, there is what I call the resurrection option. Markets change. Technologies shift, trends cycle back. A business model that failed in year one of your entrepreneurial journey might be perfectly positioned for success 11 years later. Keeping the LLC active means zero re-registration costs, no new name availability searches, no refiling of operating agreements. The infrastructure is preserved. The resurrection, if and when it happens, costs nothing beyond what you have already been paying. The annual fees for maintaining a dormant LLC vary by state, ranging from as little as $50 per year in states like Kentucky and New Mexico to as high as $800 per year in California. For someone generating $1 million or more annually, this is a rounding error. But more importantly, for someone who understands that business infrastructure is a long-term asset, it is simply part of the cost of staying positioned. Here's the truth that changes how you see successful people. They do not measure everything in immediate return on investment. They think in terms of optionality. The preserved LLC is not costing them money. It is buying them options. The option to resurrect, the option to protect, the option to reference, the option to use it as a structural tool in a future deal they cannot even envision yet. The person who dissolves their failed LLC because they want to stop thinking about it is letting emotion drive a financial decision. The person who keeps it active is thinking like an architect, not a passenger. If you are sitting on a dormant LLC right now, and you are about to file for dissolution just to save a few $100s a year, I want you to sit with this video for another 24 hours before you do that. Talk to a business attorney. Understand what you might be giving up. And if this video made you see something you had never considered before, share it with one person who is building a business right now. They need to hear this before they make an irreversible mistake. Subscribe to this channel. This is where wealth architecture gets explained in a language that actually makes sense.